Making 10x returns, a 1000% gain, is absolutely possible, but it doesn't happen by accident, and it doesn't happen overnight. It requires a mix of patience, high conviction investing, and managing your risk so you don't go broke trying. Here is your step-by-step blueprint to hit that 10x mark. 1. The 10x mindset. Where to look. You cannot get 10x returns by investing in massive, well-established companies like Apple, Microsoft, or Reliance. They are already huge. To turn $10,000 into $100,000, you need to look where others aren't looking. Microcaps and small caps. Look for companies with a small market capitalization, valuation. It is much easier for a $100 million company to grow into a $1 billion company than it is for a $1 trillion company to grow to $10 trillion. Future trends, megatrends. Position yourself in industries that will dominate the next decade. Think AI infrastructure, renewable energy, electric vehicle supply chains, or breakthrough biotech. 2. The core strategies to hit 10x. To get those massive returns, you generally have to follow one of these three paths. Strategy A, DeFi coffee can portfolio. This is the Warren Buffett style. You find incredible high-growth companies, buy them and do absolutely nothing for 5 to 10 years. How it works. Time and compounding do the heavy lifting. The math. If a company grows its earnings at 26% year on year, your money will 10x in about 10 years. Strategy B, turnaround stocks. Look for good companies going through temporary bad times. Maybe they have a temporary debt issue, a bad quarter, or a PR crisis that crashed the stock price by 80%. How it works. If the core business is solid and management fixes the problem, the stock aggressively bounces back to its actual value. Strategy C, calculated momentum trading. Advanced. This involves technical analysis, buying stocks that are breaking out of long-term chart patterns with massive volume. How it works. You ride the wave while the hype is high and exit using strict stop losses before the bubble bursts. 3. The 10x checklist, how to screen stocks. Before you put your hard-earned money into a potential 10x stock, it must pass this checklist. Feature, what to look for, why it matters, scalability. Can they double their production easily? High growth requires massive market demand. The moat, do they have a unique advantage? Prevents competitors from stealing their profits. Skin in the game, do the founders, promoters own a lot of stock? Ensures management works to make shareholders rich. Low debt, is the debt to equity ratio low? High debt kills small companies during a recession. 4. The golden rules of 10x investing. Rule number 1. Expect high volatility. A stock that goes up 10x will likely crash 30% to 50% multiple times along the journey. If you panic sell during a dip, you will never see the 10x profit. You need nerves of steel. Rule number 2. Asymmetric risk. Only invest money you can afford to lose. In a 10x stock, your maximum downside is 100%. You lose what you put in, but your upside is 1000% plus. The math is in your favor, but don't bet your house rent on it. Rule number 3. Diversify but not too much. Put your money into 5 to 7 high potential stocks. If 4 do okay, 2 fail, but just one of them hits that 10x mark, your entire portfolio becomes a massive winner. Summary action plan. 1. Screen for small cap companies in booming industries. 2. Analyze their balance sheet, look for high growth, low debt. 3. Buy during market dips when everyone else is scared. 4. Hold through the ups and downs. Let compounding work its magic. Disclaimer. This is for educational purposes. The stock market involves risk, so always do your own research or consult a financial advisor before investing.